Stock Picks Weekly, eToro edition. Every week, I scan the entire stock market, so you don't have to. Welcome to the channel. Each week, I break down the best value trade ideas I've spotted, stocks that look undervalued, overlooked, or primed for a move, and I'll show you exactly how to find them on eToro. Whether you're just starting out or already building your portfolio, this channel is your weekly edge. Hit subscribe so you never miss a pick. And let's get into this week's opportunities.
SpaceX is undergoing a historic transition from a private company to a publicly traded entity, with its initial public offering IPO scheduled to list on the NASDAQ under the ticker SPCX. The company is targeting a fixed issue price of $135 per share, aiming to raise $1.75 to $1.77 trillion. Evaluating whether SpaceX is a good investment requires looking at the detailed financials revealed in its S-1 filing, its core business segments, and the potential risks of buying into the stock at its current valuation. The three pillars of SpaceX. Following its February 2026 merger with Elon Musk's artificial intelligence venture xAI, SpaceX operates as three distinct but interconnected business lines. Connectivity, or Starlink, representing about 61% of SpaceX's 2025 revenue, Starlink is the primary engine of the company's current financial growth. It generated $11.4 billion in revenue in 2025 and brought in $4.4 billion in operating profit. With over 10 million active subscribers globally, it has transitioned from an expensive experiment into a high-margin global utility. Space, or launch services, representing roughly 22% of revenue, this is the core rocket launch business, Falcon 9, Falcon Heavy, and Starship. SpaceX commands an estimated 90% share of the U.S. commercial launch market. While highly dominant, much of its physical capacity is currently used to launch its own Starlink satellites rather than commercial payloads. Artificial intelligence, or xAI, integrated into SpaceX in early 2026, this segment includes the Grok LLM, compute infrastructure, and plans for orbital AI data centers. While it presents massive future upside, it is currently the primary driver of the company's heavy cash burn. The bull case, or why SpaceX is a compelling long-term bet. SpaceX has a near monopoly on commercial space travel and satellite deployment. No competitor currently matches its reusable rocket technology or its scale. The company's S-1 lists a total addressable market of $28.5 trillion, largely buoyed by the global integration of AI and telecommunications. Starlink cash generation. Starlink is highly profitable on an EBITDA basis, $7.2 billion adjusted EBITDA in 2025, and has pricing power. In May 2026, SpaceX successfully instituted price increases to further monetize its massive subscriber base. Index inclusion. NASDAQ has adjusted its rules to allow SpaceX to join the NASDAQ 100 index in as little as 15 trading days post-listing, ensuring massive automated buying pressure from passive index funds. The bear case, or why investors are expressing caution. At $1.75 trillion, SpaceX is being priced at roughly 94 times its 2025 revenue, $18.7 billion. Even for a high-growth technology company, this is an exceptionally high multiple that leaves no room for operational errors. Deep financial losses. Despite its massive revenue growth, SpaceX posted a $4.9 billion GAAP net loss in 2025. Operating losses have accelerated, with Q1 2026 losses already hitting $4.3 billion. This is heavily driven by the high-cost integration of xAI, which requires tens of billions in capital expenditures for AI chips and data centers. Slowing subscriptions and falling ARPU. Average revenue per user for Starlink fell from $99 a month in 2023 to $66 in early 2026, indicating that the company is sacrificing margins to acquire global subscribers. The HIT premium. Prominent independent research firms like Morningstar have issued cautious warnings on the IPO. Analysts at Morningstar peg SpaceX's intrinsic discounted cash flow valuation at closer to $780 billion, about $63 per share, meaning public investors are paying more than double its estimated fundamental value at the IPO price. Conclusion: SpaceX is undoubtedly one of the most innovative and dominant companies of this generation. However, an excellent company is not always an excellent stock if purchased at an inflated price. If you are a conservative or value-focused investor, buying at the IPO launch carries significant risk. Many analysts suggest waiting for the initial post-IPO hype to cool down before building a position, as historical data shows that massive IPOs often experience volatility once insider lockups expire. If you are a high-risk, growth-oriented investor, if you have a decade-long time horizon and believe SpaceX will successfully monetize orbital AI, dominate global satellite internet, and make commercial space travel ubiquitous, the premium may be a price you are willing to pay. Disclaimer: investing in IPOs carries substantial risk. Please read the official S1 prospectus thoroughly and consult with a licensed financial advisor to ensure any investment aligns with your personal risk tolerance.